Welcome to Profit Path. US markets step into September cautiously today. Stock futures are dipping while gold climbs to new heights. Let's unpack what's shaping sentiment. Don't forget to subscribe for reliable daily stock market coverage. Alright, here's the deal. Futures for the Dow Jones Industrial Average, the S&P 500 and the Nasdaq are all modestly lower. We're talking less than 0.2% pointing downwards. It's like that friend who always says they'll be there for you but never shows up on time. You know, the one with the potential but just a little unreliable. At least that's how I see it. But hey, markets can be unpredictable, right? So what's the vibe today? Well, it's a mix of summer's end and a wait-and-see attitude before big economic reports later this week. Basically, folks are taking a breather after the recent rally, with the S&P 500 hitting a 16-month high last Friday. You know, sometimes after a really enthusiastic dance, you just want to sit back and catch your breath, right? That's kind of the mood. Here's the plan for the day. Markets are eyeing the September jobs report and upcoming inflation figures. These reports could be the game changers influencing whether the Fed keeps rates steady or decides to cut them. Think of it like choosing between pizza and sushi. Both sound great, but you can only pick one. The Fed's decision is more like choosing between two tough opponents in a match. Who will win? The desire for lower rates or worries about persistent inflation? These economic reports are the underdogs that could shake things up. Speaking of surprises, gold just hit a record high of $3,508.50 an ounce. It's like finding a $20 bill in your old jeans. You never knew it was there, but boy does it feel good. Reuters reports that gold is on a high due to rate cut expectations and growing uncertainty around Fed policy. It's like the gold market is saying, hey, we're not sure what the Fed will do, so let's go for gold. Makes sense in a way. On the flip side, oil is down about 1%, giving back some of its recent gains. Natural gas is also down around 1.6%. It's like they're having a bad hair day, but for oil and gas. Now, Brent crude, the global benchmark, is hovering near $90 a barrel. Let's shift gears and talk about tech. AI-related stocks are taking a breather today. Names like Nvidia, AMD, and other semiconductor players have eased after rallying strongly in August. It's like they had a fantastic August, but September is starting on a cooler note. With the Fed's next move hanging in the balance, investors seem less keen on these stocks for now. Plus, renewed concerns about competition and earnings are making things a bit tricky. You see, when things get really hot, some folks start to worry about overheating. It's like when your phone gets too hot and starts to slow down. In this case, the heat is high expectations, and the slowdown is reality setting in. For instance, Nvidia is down around 3% today. It's like they had a fabulous party last month, but today, the vibe has definitely shifted. Similarly, AMD is down around 2%. Broadcom is off by 1.4%, and even Microsoft, the giant, is seeing a dip of 1.1%. The entire chip sector is feeling the chill today. In a surprising turn of events, hedge funds are keeping a cautious stance heading into September. Despite stock market highs, many funds reduced their exposure, citing lofty index levels and concerns over seasonal volatility. That's right. Even the pros are a bit uneasy. It's like when your grandma says she's too old for this, but then surprises everyone by busting a move on the dance floor. You're like, whoa, grandma, we didn't know you had that in you. But in this case, it's the hedge funds pulling back when things get too hot. Additionally, limited stock buybacks are adding to the cautious sentiment. Buybacks are like the cherry on top of a sundae, but if they're not on the menu, the sundae just isn't as appealing. So what does this mean for the markets? Well, some experts suggest the recent rally might have gone a bit too far, leaving investors in a quandary. It's like when you're at a party and everyone is asking, so, what do you do for a living? And you're like, I make YouTube videos about financial markets. It's unexpected and maybe a little out of the ordinary. So all eyes are now on tomorrow's jobs data. It's like waiting for the results of a big game. Will it be a touchdown or a fumble? This report will influence whether the Fed sticks with higher rates or opts for a cut. Remember, the Fed is all about data, data, data. They analyze tons of numbers to make decisions about rates. And this report is like one of the biggest games they watch. To recap, futures are soft, gold is soaring, tech is cooling, and hedge funds are treading carefully. All eyes now turn toward jobs data to guide the Fed's path. What's your outlook? A rally or a retreat? Let me know in the comments. And don't forget to subscribe to Profit Path for your daily stock insights. Thanks for tuning in. See you back here tomorrow.